Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can better understand what we're currently seeing in the investment trends in all sectors of the world economy, and not only in the U.S., of course, but globally. I think we're seeing some positive, slightly positive indicators coming out of the U.S. Job numbers, prelim numbers that came out this morning were actually getting a little bit better. Earnings appear to be stable and growing. So generally speaking, inflation's tame. We're seeing the U.S. economy, it appears not to really, maybe we might avoid the recessionary fears that were really prevalent about 3 months ago. So we're keeping our fingers crossed, but it appears that we may escape a recession within the United States of America. Now, of course, in Europe is a different matter. I've had a lot of questions from radio listeners and clients, and what do I really see about this whole Euro zone crisis? And I can tell you that it's extremely concerning to my staff and myself. We look at this stuff every single day, and what we're really seeing is emotional knee-jerk reactions to this. I see Europe playing out one of two ways. The worst scenario is there's a total collapse default of the euro. The banking system completely falls apart basically in days and weeks, and it really drags our economy down along with the rest of the global economy and the emerging markets, and we could easily see, 30 or 40% drop in the equity-based markets if that was to occur. The other scenario, which I think is probably more likely, is they are addressing a lot of their issues. I see their economy is lumbered along, fits and starts, and over time they slowly improve upon what they're doing to fix their banking crisis over in all of these countries like Italy, like Greece, like Spain and Portugal and so on. And hopefully that they just lumber along and we see these kind of fits and starts and bounces on the market up and down and so forth. So I expect, as I said a few weeks ago, continued volatility. Ultimately, though, if they can continue to do what they're doing and improving the situation over there, hopefully they won't have an out and outright collapse and we won't see any huge, really recession throughout the world. The emerging markets continue to do exceptionally well. In fact, even though their equity markets are most of them are off 15 or 20% year to date, we actually bought into those because of relative strength at the beginning of really what it was is November. And we continue to like the emerging market economies. As we always do, we will be making adjustments at the end of the month on a relative strength basis, and we will be taking out weak sectors and replacing those with our stronger sectors. This has been proven over a long period of time to help reduce some of the volatility and actually increase return within a portfolio. We'll continue to do that. With any investment strategy, you need to follow it, and you need to follow it religiously. And I tell this to so many investors every day. They call my radio show, especially on Sundays. Most people don't have an investment strategy, or they won't follow it more than 3 days, let alone 3 months, if it's not immediately working. That's a big mistake, and unfortunately, if you do that, you're going to basically put yourself in a whipsaw pattern where you jump from hot investment to hot investment only to see it cool off. So at the end of the day, I don't see the U.S. economy, from the signs we're getting right now, going into recession this year and probably not next year unless we really see a total collapse of the euro and the banking system over there, which at this point I think is less likely, seeing they are trying to really wrangle themselves around this problem, and they're starting to really be more positive on what they need to do, I guess is a good way to put it. This ultimately should benefit the U.S. economy. This ultimately should benefit the emerging market economies. I think for many, many years I would not be an investor in the Eurozone, period, because even if they get this thing kind of tied together and with band-aids and duct tape, it's still going to be a really ultimately slow growth economy. They're even much worse than we're seeing in the U.S., and they're going to have structural problems far worse than what we're seeing in the U.S. for I think decades to come. So it's not a place that I would want to invest in. I think there's going to be too many high quality places to invest, like the U.S. ultimately, and more so the emerging market economies. On the bond side, we continue to stay more on the short-term duration bond side. Well diversified. We still own a substantial position in gold, and gold actually has done fairly well in the last couple months compared to the equity-based markets. I think investors need to embrace sector rotation, relative strength. Buy and hold is not an investment strategy. I don't think it ever was an investment strategy, but unfortunately so many investors are somewhat bamboozled and thinking their advisor is more than just really a salesperson of investment products. You ultimately need a money manager or a registered investment advisor to make sure those changes are made accordingly. If you're not managing your money, make sure you're using a fee-only registered investment advisor, as I've always told our clients. And of course, if you are unsure what you should be doing with your money, if you're second guessing what's really happening with your portfolio, call our office for a consultation. We always like taking on new clients. We do have offices, throughout Florida, Coral Gables, Fort Myers, Boca Raton, Naples. Call us. We would love to help build your portfolio or rebuild it in a manner that's risk adjusted for you. Call us. Don't go it alone. Don't second guess what you're doing. Let us help you with your money management without the conflicts of Wall Street. Until Sunday's show, make sure you have yourself an extremely profitable week.